Welcome to The Explainer. Today we're diving into a genuinely maddening paradox. We're talking about why you can earn a genuinely high salary, do everything supposedly right, and yet still feel like you are financially running on a treadmill covered in glue. We're going to unpack exactly why comfort is keeping you broke, and much more importantly, how to permanently break out of that trap.
So let me ask you this. Have you ever noticed that as your income goes up, your bank account somehow stays the exact same? You get the promotion, you pop the champagne, celebrate the new job, but the breathing room you swore that extra money would buy you, it just completely vanishes. You're running harder, the numbers on your tax return are getting objectively larger, but day to day, you aren't actually getting ahead.
Well, let's unpack exactly why this happens. It's due to a psychological trap called Parkinson's Law of Finance. And this law simply states that expenditure always rises to meet income. It's the silent killer we all know as lifestyle creep. And it's rarely the massive, flashy purchases that get you. It's the quiet little upgrades. Upgrading from the standard drip coffee to a daily $7 latte, opting for a slightly nicer car lease, or maybe moving to a zip code that stretches the budget just a tiny bit more. Every single time your income increases, your lifestyle silently expands to swallow that raise hole.
Part 1. The Trap of Comfort. We often buy a comfortable couch, completely unaware that we're actually sitting on a trap. Seeking out safety and immediate gratification brings massive hidden risks. When we increase our spending, we're usually expanding our liabilities, not our assets. We also hit this thing called the upper limit problem, which is a psychological ceiling where we subconsciously sabotage our own success simply because going further feels unfamiliar. Then there's concentration risk. So many higher earners feel entirely financially secure, but they rely on a single linear paycheck. Think about that. Their entire financial life, their liquidity, their options, all of it depends entirely on one single company's HR department. We frequently choose the comfort of instant status to impress people over the necessary discomfort of real future growth. And that choice comes with an incredibly heavy price tag, known as opportunity cost. Now, opportunity cost isn't just some dry economics term you leave behind in college. It is quite literally the ghost of the life you could have had. It's the value of the best alternative you give up when making a choice. Playing it safe feels really warm and fuzzy right now, for sure. But the hidden cost of that inaction is massive. Avoiding the discomfort of risk fundamentally prevents you from developing new skills, taking calculated leaps, or building scalable assets that actually work for you.
To put that into perspective, psychological research shows that a stunning 76% of people's biggest regrets involve inaction rather than action. Doing nothing is actually the riskiest bet you can possibly make. The costs of action are immediate and visible. You feel them right away. But the cost of inaction? They're silent. They compound invisibly in the background, anchoring you down over decades. Just because we can't see the exact opportunity we missed by staying comfortable definitely doesn't mean we aren't actively paying for it.
Part 2. Wealth is what's unseen.
Financial writer Morgan Housel hit the nail on the head when he said, "Wealth is what you don't see." You see, as a society, we completely misjudge financial success. We rely on outward appearances. We see the upgraded car. We see the first-class flight, the meticulously curated Instagram vacation photos. But true wealth isn't the stuff you buy. Wealth is the nice car not purchased. It's the first-class upgrade declined. True wealth consists of the invisible financial assets that just haven't been traded in for flashy stuff yet. So, there is a massive difference between the desire to spend $1 million and the actual mechanics of being a millionaire. When most people say they want to be a millionaire, what they genuinely mean is, I'd really like to spend $1 million. But spending $1 million is literally the exact opposite of being a millionaire. Getting money and keeping money are two completely different skill sets. Keeping your money requires taming the peacock ego. It requires humility, strategic frugality, and starting to grow the deep roots of real wealth by accepting the positive discomfort of delayed gratification. And this brilliantly illustrates that point. Save money. The only factor you can control generates one of the only things that matters. How wonderful is that? A high savings rate is vastly more under your control than your income or your investment returns. Building wealth is simply the accumulated leftovers after you spend what you take in. To put it as bluntly as possible, your savings rate is simply the gap between your ego and your income.
Part 3. Escaping through permissionless leverage.
Think of a linear paycheck like walking on a treadmill with an hourglass strapped to your back. You trade your finite physical hours for money. You earn by showing up, but time eventually runs out. You just can't scale physical hours. Exponential wealth is fundamentally different. It's about decoupling your income from your time. It means building a machine that compounds and pours out coins while you're literally fast asleep.
Entrepreneur Naval Ravikant breaks this down into 4 types of leverage. Labor and capital are the old guard. They scale linearly or logarithmically. But the real catch is that they are permission-based. Somebody actually has to agree to work for you, or a bank has to agree to fund you. But look at code and media. They scale exponentially. And the absolute best part, nobody can stop you from creating them. They require absolutely zero permission. So, code and media are the ultimate tools for escaping the comfort trap. Think about this very explainer you're going through right now, or a piece of software. You build it exactly once, and it reaches millions of people at zero marginal cost. There's no external gatekeeper telling you no. The crucial shift here is trading your weekend Netflix binge to build an asset, a newsletter, a digital product, a piece of code that scales your specific knowledge infinitely.
Part 4. Positive discomfort and risk alignment. Now, replacing comfort with long-term investing isn't always a walk in the park. It requires a mindset shift into healthy uncertainty. You have to understand your true emotional risk tolerance. Many of us confidently think we're aggressive investors when the market is green and everyone is making money, only to absolutely panic and sell everything the moment it drops. Aligning your portfolio, whether it's conservative, moderate, or aggressive, to your actual genuine comfort level is what keeps you in the game. It transforms investing from a source of daily nail-biting anxiety into a sustainable wealth-building engine.
Because proper risk alignment isn't just about the math. It is quite literally an emotional superpower. It gives you absolute emotional stability during market downturns. It allows you to consistently contribute to your assets without losing sleep. And even better, it gives you the strategic patience to view a market crash as a massive sale rather than a terrifying threat. Surviving that short-term discomfort without panic selling is exactly what allows compounding to work its unbelievable magic over the long haul.
Part 5. The highest dividend of money. So let's tie this all together. Why do we bother saving? Why do we build leverage and endure all this discomfort? Money's greatest intrinsic value isn't a Rolex or a brand new sports car bought to impress people you don't even really like. Its absolute greatest value is buying total, absolute control over your own schedule. The ability to do what you want, when you want, with who you want, for as long as you want. That is absolutely priceless.
The highest form of wealth is the ability to wake up every morning and say, I can do whatever I want today. This is the ultimate paradigm shift. True independence starts the exact moment your assets out-earn your lifestyle. That is what wealth actually is. It's not just a number in a bank account, it's total sovereignty over your own time. So, I want to leave you with this provocative thought to ponder today. Look closely at your own finances, your own daily habits, and your own comfort zones. Are you truly building wealth? Or are you just financing a very comfortable trap? Are you building a life that only works if your job keeps working? Take control of the unseen wealth, build your leverage, and finally, buy back your freedom. Thanks for tuning into this explainer, and we'll see you on the next one.